Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
What's cooking in the tech world? Qualcomm's stock has been on a wild ride lately, taking a beating of over 30% in just the past year, but don't count them out just yet. As it turns out, Qualcomm is quietly building its strength in the face of industry headwinds. Qualcomm's dominance in 5G technology remains its primary growth driver. In its latest Q2 report, the company achieved $9.5 billion in revenue from its Qualcomm CDMA technologies. QCT segment, up 18% year-over-year, driven by its Snapdragon processors and 5G modem platforms like the X85. These chips power premium smartphones from brands like Xiaomi, which recently extended its multi-year deal with Qualcomm, ensuring its flagship devices use Snapdragon 8 series chips through at least 2030. But it's not just about mobile devices anymore. With global 5G connections projected to hit 2 billion by 2025, Qualcomm's intellectual property and licensing arm, QTL, continues to vacuum in royalties, contributing $1.3 billion in Q2 alone. And it's making inroads beyond mobile devices, powering transformative applications in new sectors. The company has secured partnerships to integrate 5G into private networks for industrial automation, enabling real-time data processing for smart factories, as seen in collaborations with firms like Siemens. Moreover, its chips are now driving connectivity in smart city projects, with deployments in urban infrastructure expected to grow as global investments in smart cities reach $1.8 trillion by 2030. But what about diversification? Qualcomm's automotive segment soared 59% year-over-year, generating notable revenue as carmakers adopt Snapdragon digital chassis for connected and autonomous vehicles. Partnerships with major automakers, including contracts to supply chips for next-gen electric cars, are pretty interesting, showing Qualcomm's pivot from smartphone reliance. By branching out and reducing its dependence on the cyclical smartphone market, Qualcomm is stripping the volatility out of its cash flows. For example, its chips are now integral to automotive safety systems and infotainment, markets expected to grow at a 10% CAGR through 2030. Qualcomm's automotive revenue is projected to reach $8 billion annually by 2030, per analyst estimates, bolstering its long-term growth as these segments scale. And then there's AI and data centers. At Computex 2025, CEO Cristiano Amon shared plans for the company's return to the data center market through a partnership with NVIDIA. Together, they're developing custom ARM-based CPUs built for AI workloads. The goal is to offer a more energy-efficient alternative and take on established players like Intel and AMD. So what does this mean for Qualcomm stock? Look at its chips, which are starting to penetrate the PC market. Q2 results showed solid growth in laptops built for AI features. Qualcomm's focus on on-device AI, which improves privacy and efficiency, is already drawing interest from major partners like Microsoft. Despite these wins, Qualcomm stock is trading in what looks like deep value territory. The company has seen its shares decline consistently over the past year, and yet its profitability surges. EPS jumped 30% to $2.85 in Q2, well ahead of forecasts, leaving the stock trading at just 12x this year's projected earnings. At this multiple, I believe the tech giant is priced like a bargain. Historically, Qualcomm's cyclical exposure justified lower multiples, but today's 5G, automotive, and AI tailwinds are structural, not fleeting. So what's the verdict? If you're looking for a trading platform, make sure to check out TipRank's best online brokers. But if you ask me, Qualcomm is hardly out of the game. With strong leadership in 5G, rapid growth in automotive and IoT, and an ambitious move into AI and data centers, this company is firing on all cylinders. At what appears to be a bargain valuation, the potential for earnings growth and multiple expansion is hard to overlook.